Hi everyone. Thank you very much for joining us this evening. We are happy to have you, and we are looking forward to an amazing conversation today on a topic I think that's quite personal to all of us. My name is Grace Nzula. If you're joining us for the first time, welcome to Get It Right with Atara Solutions. Get It Right with Atara Solutions is a webinar series that seeks to demystify issues in employment and entrepreneurship. So we do this here every Tuesday from 8 p.m. To about 9:15 thereabouts. We discuss quite a number of topics. Last week we were looking at trauma and how to spot trauma in the workplaces. And the week before that, we were dealing with staff engagement. And today we are talking about finances. So we have quite different topics of discussion, and that is what we are about. We are on a mission to change the world through information. And personally, I'm an HR consultant with Atara Solutions. Atara Solutions is a HR consulting firm that offers a HR manager outsourced for those organizations that do not have a full-time HR. Please get in touch with us and we'll be able to offload that burden off you. We also offer HR consulting. If you want us to review your policies, if you want us to conduct a HR audit, if you want us to look into your HR systems, if you want us to look into your job evaluations and analysis, if you want us to do whatever you're looking for, just somebody to confirm that you're actually on the right path, we do that for you. We also offer training and development. Learning and development rather. We have customized training for your organizations. We offer team building. We also offer personalized personal development learning options like coaching and mentorship. We also offer recruitment and selection. So if you have any need for all those services, please get in touch with us and we'll be able to offer you those services. On Get It Right, we have my co-host. Before I give a shout out to our partners, we have Richard. Richard, you can introduce yourself and tell people what you're doing.
Thank you so much. I was not concentrating. I cannot multitask. That is why it happened. I didn't remember that the camera is on. Nevertheless, my name is Richard J. Magoma. I am a human resource practitioner. I am a trainer. I am a writer. I write for the Business Daily. On Wednesdays, I train people in public speaking. I also train people in interview preparation. And as usual, I am very delighted to be here on Tuesday so that we can activate our knowledge about business and career development. And there is this word that you normally use that nowadays it has stuck with me: demystifying certain difficult issues relating to business. It is a wonderful, wonderful. We are going into the 6th or 7th episode, and this is commendable. Thank you very much. Over to you, moderator of choice. I hope you're enjoying in Naivasha. Thank you.
Thank you, Richard. And of course, we have our co-host, Catherine Sidandi. Catherine Sidandi is our sign language interpreter. She supports us in being inclusive. Thank you very much, Catherine, for the good job that you're doing. Catherine taught us today how to say I am HR. I think I understood it. There's something like that. And then there's this and that. I'm doing well. Ha ha! Yes. So next time I'll just say my name is Grace Nzula and I am sasa nimesahau. I am, oh yeah, HR, and like that. Excellent. Yes, so I have just learned how to say I'm HR and I'm very excited. So Catherine is our sign language interpreter, and she supports us in making sure that we are reaching out to those with hearing impairment and probably just being inclusive, which is an amazing thing. I think next season we are going to be having French interpretation right here as we figure out how to do that on Zoom. That's part of the innovation we are bringing for season. I don't think we're on going to season 6. Where we have been here since 2020, and this has been an amazing journey. So allow me to give a shout out to some of our partners. We have Nile Front Cottages. Nile Front Cottages, it's that time of the year, my good friends. If you're wondering where to take your families, if you're wondering where to take yourself, for those of you who are not married and you're wondering, you are done answering questions to your kingsmen about why you are not married, so you're not going home this Christmas, please go to Nile Front Cottages. It's an amazing location in Jinja, Uganda. Jinja is about 2 hours drive from the border, from Busia border, but you could also fly to Entebbe and also get an hour and a half drive to Jinja. Nile Front Cottages is one of the most beautiful places I've been to. It is about 5 minutes on boat to where Lake Victoria meets River Nile. Then it has the most amazing sunsets and sunrises. Yani, you need to just go to Nile Front and just see for yourself. We have Elsamea. Elsamea is a lodge located here in Naivasha. Elsamea is a conservancy, and also they offer accommodation and conferencing services. If you're here in Naivasha and you're wondering what to do with yourself, please go in for a cup of tea. Get to understand who Elsa is. Elsa was an adopted lion. You get to know they have a museum, and they also have the story of Elsa in videos recorded. It's such a beautiful place. It's a place, if you want to go for serenity, then I don't think you have any other choice but to go there. It's beautiful, and they make the best cookies, actually. So you go in, they have tea o'clock, and you can have your tea. If you do not want to spend the night, you can just experience the magic there. And go there and mention Natara Solutions. You might just be in for a discount. Then we have K Square HR Services. K Square HR Services is our partner in Kigali, Rwanda. If you're looking for HR services down in Kigali, please get in touch with K Square HR Services. And then we have Profiles International. Profiles International are the people who offer emotional intelligence coaching certification. So if you want to become a coach in emotional intelligence, then you need to take your certification with Profiles International. If you want to also get psychometric assessments, they also support HRs in providing psychometric assessments. If you also want to do personality tests and all that, then Profiles International will be able to do that. We have Steadfast Quality Solutions. Steadfast Quality Solutions are our partners in Uganda. This is headed by my good friend Herbert Zake. Herbert Zake, thank you very much you have been such an amazing person and a partner of Get It Right with Atara Solutions, and we cannot thank you enough. If you're looking for board evaluations, board trainings, then you need to get in touch with Steadfast Quality Solutions. And for you individuals, if you're looking for a coach, Herbert is a Gallup Strength certified coach. He has coached over 500 executives. So do not get stuck, and especially those in Uganda. And he can also support you virtually. Please get in touch with us, and we'll be able to link you with Herbert Zake. We have AR Insurance for all your insurance needs. We have Planet Yoga, Planet Yogurt, my God. Labor Planet, a labor outsourcing organization. We have Capula Mintito for your coastal snacks. Richard loves their cashew nuts. If you came for our dinner last year, we actually gave everyone a Capula Mintito cashew nuts. Then we have Panessa Training Institute. If you wish to be trained as a carpenter, you need to run to Panessa Training Institute. Just get to understand how to work with wood. And you know, Panessa Training Institute is under Panessa Kenya. Now, if you have no idea how to choose your furniture, if you have no idea what good quality furniture is, please go and check out Panessa Kenya Limited. They have one of the most beautiful pieces of furniture I have ever seen. And of course, they're the ones who are training people in woodworking. We have Wicklin for all your carpet cleaning and office cleaning needs. Wicklin have a machine that cleans your carpet in 9 minutes. They will be able to pick your carpet today and return it tomorrow. And then if you're in Mombasa, please go for the band at Hotel Sapphire. Do not let your Friday evenings just go like that. Hotel Sapphire. Please go there. They have just such a beautiful band on Friday evenings. And then their food, they have lunch. Oh my God, their coastal dishes. I do love their viazi karai. Honestly, we held our tea there, and their viazi karai, their mbaazi wanazi. Oh my God. And then we have Port Sacco for all your Sacco requirements. If you're looking for a Sacco to join, please join Port Sacco. They're actually open to you. They have an office in Nairobi. They have an office in Mombasa. And I think they're also moving to major towns. I think they also have an office in Kisumu. So please do not, if you're shopping for a Sacco, look no further than Port Sacco. And then, of course, we have the services offered by my co-host, Richard. If you're going for an interview and you're looking for support, Richard is able to give you tailored strategies to answer your tough questions. He also will teach you how to present yourself. He also gives you insights on how leaders think and they expect. He'll give you techniques for building strong connections and then the best way to showcase your strengths. That's the services offered by Richard here. Please get in touch with
Grace, I think we have lost you somewhere.
Yes, we do. I have also noticed.
All right, we will be able to pick from where she has left so that we can start the conversation so that we don't lose time. She will come and add what she has not been able to add in terms of sponsors. It is a wonderful evening that we're going to discuss investment vehicles, and who else to tell us about investment vehicles other than Bob K. Welcome, Bob K. You can brand yourself. You can tell us what you do, how you started the journey of teaching people or coaching people, or mentoring people, how to invest. You're welcome. Take it away, Bob.
Thank you. Thank you. Grace, welcome. We had lost you, but Richard is ready and was waiting to stand in for you. You are back. He had just asked me to introduce myself. I don't know whether you want to say something before I go on.
Yes, Richard, have you invited people for the dinner?
I hadn't.
Not yet.
I hadn't.
just 1 minute. This is very important. Right. So we have our end of year dinner coming up on the 15th of November. Please come. The theme is the power move, up level your business and career. We can still grow regardless of the uncertainty. We can still grow regardless of the challenges that we are facing. So come and learn how. We have quite a very, very awesome lineup of speakers. We have a coach, we have a HR professional, we have a business person, and then we have a keynote address. Please come on the 15th of November from 5 o'clock at Westwood Hotel in Westlands. This hotel is at Eldamaravine Road at only 4,500 Kenya shillings. Come learn, come have fun, come dance, come network, and come ready to face the coming year. We will help you in setting up your goals for 2025. Dress code is a touch of African. So shop, book. See you on 15th of November at Westwood Hotel in Westlands. Now, I think, yes, now we can move on to the topic of the day with our speaker.
Okay, thank you, Grace. My name is Bob Karina. I'm the chairman of Faida Investment Bank. It's a member of the Nairobi Securities Exchange and licensed by Capital Markets Authority. We've been in the market since 1995 when we got in. I'm a founder and the chairman of the investment bank. I'm also the current chairman of Rwanda Stock Exchange. So I've been in the market for a while. Now, what we do at Faida Investment Bank, we do stock broking, that is buying and selling of shares, bonds, bills, and the like. We do corporate finance, and we also do mergers and acquisition. In fact, if the listeners can remember the merger of CBA and NIC, which became to NCBA, we are part of the advisors in that merger, and we were awarded for a job well done. We also do valuations of companies. If you have a company and you want to know how much it is worth, we are very good at that. And various other corporate finance transactions. So that's what we do. But for now, I've been invited here to talk about bonds and bills. So as Richard had said earlier, I want to demystify those products. So to start with, let me say that I don't have anything to share on the screen or project, but I want to just to talk it over, and we'll entertain questions when they come later. Now, treasury bills and treasury bonds are part of what is called fixed income securities. And this is a type of investment that provides a return in form of fixed periodic payments and eventual return of the principal on maturity. What this means is you give money or you lend money, and then you get a promise that you will receive your interest on agreed periods. The payments of these fixed income securities, they are known in advance, or you agree in advance, and they remain fixed throughout its term. The only thing one needs to know is that even if they are fixed, they often offer lower return on investment than equities. Equities can even double, triple, but also you could reduce in the value or the price of the share. So if I may start on what is a bond is actually a promise or a covenant. Sometimes it is considered as an IOU, meaning I owe you for something. So a bond is a loan between the borrower and the lender. The borrower promises to pay the lender agreed interest at some date in the future. The borrower also promises to repay the initial money invested by the lender. So what it means here, if you buy a bond, for instance, from the government is actually borrowing money from you. And you are the one lending the government the money. So the money that it utilizes, you agree on the period for which the money you're giving will be held by, for instance, the government. So treasury bonds, when we talk of treasury bonds, you are giving the government money in form of treasury bond as a lender. And then the tenor or the maturity of this bond, it ranges from 1 year to 25 years. And in some countries, it could even be more years. Then at maturity, investors are given back the principal, which is the amount they originally invested. The government securities, these are the bills and the bonds, and the corporate bonds, they are the most common types of fixed income products, which are issued to raise money to fund day-to-day operations and finance large projects. The government uses money. They have, for instance, you've heard of what is called infrastructure bond, which is meant for money to do nothing but build infrastructures, roads, and the like. Corporate bonds are used for various uses by the institutions. The common features of bonds are principal, which is the amount that you invest in, the interest that is agreed in advance, or the borrower, the government will pay you, which is also called the coupon payment, and the tenor or the maturity. This is the period for which you have agreed the bond you are paying for. Then we have what is known as treasury bills. Treasury bills are short-term government debt securities, and their maturity period is less than 1 year. So currently, the Kenya government is offering the 91 days bills, 182 days, and 364 days as the three different types. The 91 refers to like 3 months. The 182 refers to 6 months, and the 364 days is like 1 year. The only thing now, or the thing that we need to note about treasury bills, is that they are sold on a discounted basis, which in simple terms means that you pay for the bills less the interest receivable during the term of the bill. And then you receive the face value of the bill at the end of the period. For instance, if you wish to invest, for example, 100,000 Kenya shillings, and the prevailing interest rate for a 364 paper is 15%. Actually, currently, the 91 days is paying about 14.5. The 182 days is paying 15.1%, and 364 days paying about 15.5%. So let's assume the 364 paper, which is about a year, is paying 15% for the Treasury bill, and you're investing 100,000 Kenya shillings. You will therefore pay to Central Bank of Kenya 85,000 shillings, which means you have paid less the 15%, which is the interest on the paper. And then at the end of the period, which is at the end of the 364 days, you will receive back your 100,000 shillings. You note here, you could even, the money you have left behind, the 15,000 shillings, as your interest, which is left at the time you're buying the 1 year bill, you can even reinvest that money and also earn interest on it somewhere else. So after you give the 85,000 to receive the 100,000, you receive a note from Central Bank that will indicate that you'll get your amount at the end of the period. Now you may ask, who can buy these bonds or bills? Any individual can buy. Corporate society, women groups, chamas, they can put their money into these products, youth clubs, churches, schools, colleges, universities, investment groups, all these banks also, where you take your money, they also utilize this to invest the money that you give them, and many others. You might also ask, can bonds be sold before maturity? Yes, they can be sold. The only thing is you can't go to Central Bank and sell them. You sell this through the stockbrokers or investment banks at the Nairobi Securities. You can come to Faida Investment Bank. We can help you sell after you have bought. And then the interest on the bond grows on a daily basis. And so a bond has a new value and price every day. And you can sell any day of your choice if the need arises. There are no penalties when you want to sell, but you sell at the prevailing price of the day. But for the Treasury bills, these ones you cannot sell at through the stockbrokers or the investment banks, and they are not sold before maturity. Because they are short-term, it's expected that you will hold them for the period that you have agreed. So if it is 91 days, you wait for 91 days, you get your money back. If it is 182 days, you wait for 6 months, you get your money back. If it is 364 days, you wait for the period, then you get your money back. However, there are times you may need your money back. Something major happens, you need medical bills paid for an emergency that has come, and you cannot wait, for instance, for the period to get back your Treasury bill paid back to you. This one, therefore, can be allowed to sell the bills, but you have to, it has to be rediscounted at the Central Bank of Kenya. And you are charged a penalty. They'll give back your money, but they will also charge you a penalty for going back to them before the period is over. So what would you say are the benefits of buying these bonds? One of the benefits of buying the Treasury bonds is that they are accepted by most financial institutions as collateral. If you want to put a security, which we are calling here collateral, for something, they are easily accepted by financial institutions for the reason that if you fail to pay back what you've taken from them, they will easily sell it and convert it into cash. So they are really loved by financial institutions. The other thing is a source of income. Source of income in the sense you put in money, for instance, if you're buying a bond and you are assured or you have agreed that you'll get interest at the periods of, let's say, if you buy a bond, for instance, of 5 years, and the interest is, as I had said earlier, let's say for the Treasury bond is also 15%, it means for 100,000, you'll be getting 15,000 a year paid semi-annually. So you get 7,500 every 6 months, and you'll continue receiving this money until the 5 years are over. At the end of the 5-year period, you'll get back your 100,000 and the last interest payment. So we are saying it's a source of income because you're getting money by just having lent your money to the government in form of interest payments. And they are paying you interest because you gave them their money. And just maybe to remind you, when you agree with the government that you're giving them, or where the central bank is the one that collects the money for 5 years, it means you have left them the 5 years to do what they want with the money you've given them and not to go back to them. And as I had said earlier, if you need your money back, come to the investment banks like FAIDA or stock brokerage firms, and they will sell the bond for you. And then another benefit is liquidity. Liquidity in the sense that they are easy and quick to sell in the market in times of need. If, going back to the same example of a bond of 5 years, if after 2 years you need your money back, you just come to us and we sell it for you. So it doesn't have to wait for the five years. If need arises, you can sell earlier. Then the other benefit is a saving for the future. This money you have put it aside, you're earning interest, and you get your full amount at the end of the period. Then they are also easily transferable, meaning you can give to somebody and transfer it to someone else if you wish to give them as a gift or something like that. Now, the difference then between a bondholder and then I'm sure some of you also know what are shares and shareholders. The shareholders are the people who hold shares at the stock exchange where they buy shares for companies. Now, the shares of the companies is not lending. Actually, you become part owner of the company. But let's go back to our topic for the day. What's the difference? And then if there are questions about shareholding and shares, I can answer later. The difference, one is a bondholder is a lender to a company or to the government. You are giving the government money, which they will return in the end. A bondholder expects a profit in form of interest at a specific agreed time in the future. A very important thing to know also is that bondholders do not vote or participate in the management of the company, unlike a shareholder. A shareholder, on the other hand, is a lender, but also an owner. A company that sells shares at the stock market, what you have heard in the past called IPO or initial public offers, you buy into that share by giving money, and they give you a certificate or an ownership document that says you are owning so many shares for a certain company. So you have given them money and you become a part owner, where you can make decisions or help be part of the decisions that are made at the annual general meetings. A shareholder expects profits from the company they have been part of now in form of dividends. You can also get money through capital gain in share price, meaning if you bought a share at 10 shillings and it's trading at 15, the 5 shillings is called capital gain. You can also get bonuses. Companies issue bonuses to the shareholders. And at times, you can also get to buy what is called rights issues. Rights issues, like currently, Housing or HF Housing Finance is selling rights issue to the shareholders. What the rights issues are is that you get to give the company money by buying the rights, and the company usually sells those shares at a discount, meaning cheaper than they would sell in the market. So they get the price which shares are trading in the stock exchange and discount that and sell to you. That privilege is only reserved for the shareholders. And then another benefit of a shareholder is that you attend the annual general meetings. You give opinion, you're allowed to give opinions, suggest what you have in mind about how the company you feel should be run. You vote in the directors. You could also, some companies, you could also vote in the chairman, although many other companies, the directors are the ones who appoint the chairman. But you need to know also, you accept risks as part of the business. So whatever happens to the business, if the risks come to the business, you share in those. Now, what are the differences now between the bills and the bonds? The bills, we consider them short-term, but the bonds, we consider them short-term, medium, and long-term. This is because the bonds range from 1 year to 25 years and over, but the bills are less than 1 year or up to 1 year. The other difference between the bills and the bonds is that the interest is earned in advance, while the interest in bonds is paid in arrears semi-annually. Another difference is the minimum amount that you can invest in the bills is 100,000 Kenya shillings, while for the bonds is 50,000 shillings. Another difference is that for the treasury bills, these are not traded at the NSE or the stock exchange, but the bonds are traded at the NSE as in the secondary market. Then we have what is called corporate bonds. The corporate bonds are fixed income securities which are issued by corporations, companies, to raise funds for expansion, plants, machinery, equipment, or working capital. A company feels that they need money to grow, but they don't want to go and borrow money from the bank, but instead they issue a bond. But then it follows the same principles where they will give a bond, they will come and collect money for a period that we call it corporate bond. It could run for 5 years also or more, and they promise to pay a certain interest for the period, which is also paid semi-annually. Something important to know here is that for the bond, because for companies, they are considered to be a little riskier than the government, they usually pay a little higher interest to the investor. Something else to note about these bonds is that they include an indenture, which is a legal document or an agreement that lists the obligations of the issuer, the company, to the bondholder, including the payment schedule and other features, which could include redemption, early redemption, call provisions, and the like. Then we have what is called zero coupon bonds. The zero coupon bonds promises no interest payments during the life of the bond, but only the payment of the principal at maturity. The purchase price of this zero coupon bond is the present value of the principal payment at the required rate of return. For instance, if the price of the zero coupon bond that promises to pay 100,000 in 5 years with a required rate of return of about, let's say, 8%, it would be sold for 67,556 shillings. Then you will get your 100,000 at the end of the period, the 5 years, but you receive interest. You don't receive anything else because you already have less than about 33 or 32,000 left with you to get the 100,000. So the holder of a zero coupon bond realizes interest by buying the bond substantially below its par value at a discount. Now, if we come to maturity, the term to maturity of a bond is the number of years the debt is outstanding or the number of years remaining prior to the principal payment. The maturity date of a bond refers to the date that the debt will cease to exist when the issuer will give you back the money that you give. at the time you're buying. Something to note also is that the price of a bond will fluctuate over its life as interest rates as market changes. The longer the maturity of a bond, the greater the price volatility resulting from a change in interest rates. And then for the par value of a bond is the amount that the issuer agrees to pay to repay the bondholder at all by the maturity date. The amount is also referred to as the final amount is also referred to as the principal value, face value, redemption value, or maturity value. And bonds have different par values. Now, something before I stop is I wanted to talk about floating rate securities or bonds, or the variable rates. You see, there is the fixed securities where you have a fixed amount or interest agreed to be paid for the life of the period. There is also a floating rate that is dependent on the prevailing reference rate, which is usually the Treasury bill rate. So the coupon rates or the coupon payments, they reset periodically according to the reference rate, which means that the coupon rate which you will be paid, or the interest that you'll be paid semi-annually, will be the reference rate, which is like the current Treasury bill. If we say it's 15%, then you add a quoted margin, let's say like 1 or 1.5 or 2% above the reference period. This product sometimes is liked by investors where they think the rate of interest will vary. So if they project, for instance, the rate of interest will increase, then they will know they will be getting higher rates of interest over the period of the bond. So Grace, I think I'll stop there, take questions so that I don't just talk without knowing whether people are understanding what I'm saying. Sorry if I took a little longer.
No, this is just perfect. Do you know, Bob, you have literally demystified, which is what we seek to do. Because sometimes you listen to people speaking about bonds and T-bills, and you really get out of there, and I speak for a lot of us, you get out of there without just understanding what exactly are you talking about. You have really simplified it into what we laymen can actually understand. So yes, I can confirm noise for us, and I've seen quite of the comments on the chat at this point. I don't know that you can hear me. Can you hear me? Am I clear? Am I audible?
It's breaking a little, but you're back on.
Okay. I've just seen the notice that my whatever needs to be checked, and you can see the claps that are coming. Anyway, some people are asking whether we have a recording. Yes, we will share to see that. Now we can probably, Richard, you can take the questions maybe as I figure out this internet thing.
Thank you very much. You can see the appreciation, Bob, that you've really demystified. You've made some of the concerns very clear, and I'm sure we are coming out of this place going to be very good investors. Are bonds, ETFs also good investments? That is from Ellen Patience. That is the question to you, Bob K. Are bonds, ETFs also good investments?
Yes, they are good investments. Let me say, for instance, the bonds. Many of the people who we would consider risk averse, or let's say those people who are afraid of losing money, they prefer bonds in the sense that your principal will be maintained. You will not lose any money when you invest in the bond. And you'll also earn interest on top of the investment that you have invested. So it's a good product. It's a good product as one of the diversification products that you would have, so that if you need money quickly, you can also get your money easily. But what we have found is, other than that, the older people, as you get older, you become risk averse, you don't want to risk your money, so they more than not go to the bonds. The ETFs are the exchange traded funds. These are also good to invest because, for instance, we have in the Nairobi Securities Exchange what we call the indexes, which are exchange traded funds, which is a combination on the performance of the index, and therefore you don't lose much and you can still gain. So I would say yes, they are also good products to invest in.
There's somebody who was asking, I've lost the question, whether somebody can, with the income that comes from those investment vehicles, can somebody survive on them? For example,
good question.
The maturity level comes after a long time.
Okay, let's say this. Assuming an investor puts in 1 million shillings. If you buy a bond of 1 million shillings at 15%, and the bond we have, there are some bonds we have had which were earning up to 18%. But let's assume it's like let's say it gives you 18%. And these are infrastructure bonds, meaning they don't charge you any tax. You invest in it and you get your full money without any deduction on any capital gains and the like. So for 1 million, you will get 180,000 a year, broken into 2 payments, 90,000 after 6 months, 90,000 at the other 6 months, or monthly. If you now break that into 6 months, you're getting 15,000 every month. You may not really survive on that, but it depends on your cost of living. So knowing that you get that money, then you can plan on it. And no, I have 15,000 every month to keep me going for the period of the bond. So that's what I would say. So it depends on the amount of money that you put in as an investment.
Thank you very much, Bob. That was a question by Leonard Orunga. Then there is Grace Wamboi. What's the difference between bonds and treasury bill and money market funds form of investment?
Okay, I had explained earlier about the bills and the bonds, but maybe she joined us later. What I would say is, I'd say that the bonds and the bills, the difference was that the bills are short-term in the sense that they go up to 1 year, meaning, and they are given into 3 products. There's the 91 days, which is 3 months, 182 days, which is 6 months, and 364 days. Then the bonds, they start from 1 year up to about 25 years and the like. I had also said earlier that the other difference is for the bills, interest is earned in advance, meaning you pay for the bill less the interest, while the bonds, interest is paid in arrears, semi-annually. The other difference is the minimum amount you can buy the treasury bill with is 100,000 Kenya shillings, while for the bond is 50,000. And finally, I did say that the treasury bills are not traded on the stock exchange, but the treasury bills are traded on the stock exchange. The money market is a fund. It's called money market fund. Is a fund that is pulled into a collection of money from investors, and then it is invested in products that trade in near cash products. They could put in fixed income, they could put in bonds, they can put, whereby if you want to get your money back, you will get your money back. So it's a combination of a fund that invests in these near money products.
I have a question.
Sorry.
Yes, thank you for that, Richard. Sorry to cut you. There's something you said about investing as a group. Was it in T-bills or is it in bonds? Can people go into these things as individuals?
This these investments, they are for individuals, for groups, for chamas, for companies, for even banks. I even say the money people put in as the current account money in a bank, the bank takes that money, that they work out a probability of coming for your money, and they see how much remains in the bank, and they place that money in they invest your money in the bond, and they earn interest from the money that is idle in your account. So let's say everyone, individuals and everyone, churches, groups, students, anyone is free to invest. This is an investment for everyone.
And then I like this question. Assume I'm green in terms of investing on bonds. Where do I start? As in, what is required apart from the money to be invested?
Very good. Now, such a person or anybody here who wishes to learn more about these products, about the products in the Nairobi Securities Exchange, we are free to visit our offices. We are FIDA Investment Bank, and we don't charge advice. So we will open accounts for you for trading. We'll show you how to open accounts to buy the bonds, the bills, and also invest in the products at the Nairobi, this including those things like exchange traded funds, the shares, and the like. So feel free. You can write to us. Just write info@fib.co.ke, and then we'll give you advice or book appointment to see any of the wealth managers in our organization. We give free advice, and hope you will learn from it. But maybe, if you may allow, I could also say that the central bank has come up with what is called down CSD, whereby you can actually even buy these bills and the bonds through the link or through central bank. If you log in into central bank site, in fact, if you go to Google search and you just type in Central Bank of Kenya, it will open up to a website where you can now see how you can access DAO CSD. DAO is DHOW CSD. Then you go through it, and it will take you step by step on how to open an account, and guides you through how you can invest in the treasury bills and bonds. However, you can come to us. We'll help you instead of going through the forest without knowing which way will take you out of the forest. So feel free to contact us. If you type in the Google search FIDA Investment Bank, you'll see our contacts, and you can reach out to us and we'll help you.
All right. And Joseph is saying, how safe are government securities with the political instability in Kenya? Which is more between government securities versus fixed deposits?
Very good question. Let me say this. Worldwide, treasury bills and treasury bonds are considered the most risk-free products. Why this happens is because it's the government that is issuing. Yes, we cannot deny there are challenges with the government. We cannot deny anything could happen, as it happened in some countries like in Ghana, where there was a problem with the government and the like. But all said and done, I would say is the best, almost not the best, let's say, most risk-free product. Fixed income will pay you less, or sorry, fixed deposit will pay you less than the government interest rates, because as I had said earlier, the money you put in fixed deposit, they'll pay you maybe maximum 10% or 12%. They will take your money and put it in the government bond. And if the government bond is selling for 18%, they will make that difference of 6% as their interest for the company. So I would recommend to put the money in the bond.
Okay. And with 1 million to invest, which is the better option, T-bills or bonds?
Okay, that now depends on how soon do you need your money. Okay, there is a time when the treasury bills, as you said, are short term, less than a year. There is a time, or the last, let's say, 1 year or so, when the interest in treasury bills were higher than the previous bonds. In such cases, it was advisable to invest in the bill so that you can recoup your money quickly and keep reinvesting. But if there is a long-term bond paying high interest rates, then you go for the bond. The reason being, if you still want to get out even after a week, if you buy today and next week you want to get out of a bond of 10 years, you can still do it. So I would say go for the bond if it's paying a better interest. But this advice we can give when you come, because you see, at every time, there is one thing which is better than the other, depending on that current situation of the economy.
Bob, what are some of the risks? It's all beauty and glamour, but what are the risks?
The major one would be like the government collapsing. The government collapsing. It hasn't happened for 60 years. We've been in the independent, and therefore I wouldn't say it will. And then at the same time, you see, if that would happen, if anything was to happen and the government is unable to pay the money that it has taken from you, it gives a very bad perception to many other things that are happening in the country. Investors will run away. We will not get people coming here. It's a serious thing not to honor the commitment that you have given to the investors. So the major risk would be government failing. But I'm saying it hasn't happened. And if there is a risk, it happens, it would be disastrous. But other than that, I don't think there is any other risk.
Okay. There's a question I've seen from Wilfred. Ladies and gentlemen, if you can put your questions on the Q&A, it would be easier. The chat is too busy. My question, can one hedge and put a caveat on no loss when the investment starts making losses?
Okay, you see, for the products we are talking about, which is the treasury bills and the bonds, there's nothing about losses. It's a guaranteed. Okay, let me use guaranteed with caution because anything could happen to the government. But let me use it because it has never happened in Kenya. It's a guaranteed amount. Let's say if you put 100,000, 500,000, 1 million by the bond or the bill, the guarantee is that you will get your principal back. That's the amount that you have paid. And they have also agreed to pay you a certain interest, let's say 15% every year, broken into paid semi-annually for the period of the bond. There is nothing like that. They are caution. No, you'll get your money back.
And how do you know the interest rate before investing, especially using those CSD?
It is, look, see, if you're buying a bond, they usually say what they will pay. If not, there is what is called, you are buying a bond which the interest rate is not agreed upon, but you will go by what is called a non-competitive interest rate. But we can guide you. That's where we come in and tell you the bond that is coming on sale, based on the previous bonds that were sold of the same maturity period, what is tenor, it will pay around this figure. And more than not, we are almost sure of around what interest rate it will pay. So we can guide you on what to quote, and what you quote and it is accepted, that is what you'll be earning for the period of the bond.
And I think Joe has asked this question from both sides. Which is wiser? I throw my money in one investment option, or I spread my money in different investment opportunities. For example, 200,000 in one, or divide the 200 into 4 in different investments.
Okay, the only thing I would say is I'm not sure whether they are talking about just the bills and the bonds or just general investment. Let me answer both. If it is for the bills and bonds, you could split if it's 1 million, you could put 200,000. I don't know whether it was total 200, but okay, let me assume it's 200,000 in total. You can buy the 200,000. If you wish to have some money earlier, you can put 100,000 in bills and 100,000 in bonds. If it is for general investment, it's usually good to spread the investments. You could put some money in the bonds and you could put some money in equities on money market. Maybe I should also say here, we have a new product as FIDA called Oak Special Fund, which assures you good return and it invests in almost assured return investment. So these are products we can also talk to people about them. Anybody who wants to know a lot more about the Oak Special Fund or FIDA Investment Bank, they can write to us. And this is another product besides the bonds and the bills that could give you some good return, better than some of the other products out there.
And Bob, let's speak to the East Africans. What do Ugandans do?
The investments in the region, they are open to any of the citizens of the region. Meaning, if a Ugandan, Tanzanian, Rwandese, Burundi, South Sudan wants to invest in Kenya, they are considered as locals. Similarly, if any of the Kenyans and the other citizens of the region wants to buy anything in Uganda or Rwanda, you are free to buy. So what you do is you just need guidance as to how to go about it, and you are free to buy. Nobody in the region is restricted. You are not considered foreigners. The East Africans, all of them, from the 5 countries, are considered locals. So this is a product for everyone. For instance, now, I know Rwanda is paying for the bond about 13.5% interest for their bonds. So you compare what is Uganda paying, what is Tanzania paying, and then what is Kenya paying. Then you also consider how easy is it to repatriate or get my money back here. Thirdly, what are the risks of the exchange rate? Which country is, because you see your 100,000, if there is depreciation of the local currency, you'll get less money back. So you consider all those things, which you will be guided by the investment advisors, and then you know which of the products available in the region you can put your money in.
Can someone from Uganda invest through your company? Because physically it's tricky to come. That's from Eria Kigoe.
Yes, and that's why we have now, the internet has made contacts and connection all over the world very easy. FIDA has an app called FIDA M Trader, which is an app that you can get in the internet, and you can even register and start trading immediately, even on your own. In fact, these days, the app helps you even to trade in the securities like equities from any part of the world where you are in. So yes, you can trade and you can buy through contacting us through the app, the FIDA M Trader, or as I said earlier, if you need details or explanation on the things that you do not understand, just write to info@fib.co.ke. FIB stands for FIDA Investment Bank. So info@fib.co.ke will be at your service. And if you don't get assisted, I will give my final details to Grace. Then you contact me to help you out.
And do you charge a fee? That is what Silas is asking.
Other than what is called statutory charges or the brokerage fees, nothing else. Advisory fee we don't charge. As I have said earlier, advisory fees we don't charge. To get advice from us, it's free. But you see now, when we work for you, you pay us a little fee, which is actually authorized by the Capital Markets Authority. Nothing more than what is prescribed in the regulatory statutes.
Beatrix is saying she's tried to open an account through CBK website, but on so many attempts, it's been unsuccessful.
She can contact us, Grace. She can contact us. We get to understand where she's hitting a snag, and we help out.
Does withholding tax on bond remain fixed through the bond maturity period, or is it for coupon rate?
It's for the coupon rate. It's for the coupon rate, and it remains as per approvals by Parliament Act of the Act of Parliament. So that remains for the coupon only. Then you get your principal back.
All right. Richard, you have any question?
There was a question by Muiha. She had missed some word and she was able to correct that. That was a wonderful presentation. What rate do you charge when you sell for someone before maturity rates?
Okay, before maturity, what happens is this. If, for instance, now we are in, we are in October. If the coupon rate was paid in June, for instance, and the next coupon is in December, meaning every 6 months, it means in June, you received your coupon for the bond that you invested. But if you want to sell today, which is in October, the person who will buy that bond will earn the coupon for December in full. Because what central bank does is to change the name from Grace to Bob. So Grace is the one who earned the interest in June for the bond that was invested. Now, Bob wants to buy this bond from Grace to continue for the period that is remaining. So from then onwards, we will work out, we will pay Grace the money for the bond that she's selling to me, and then the coupon, the interest that would have been the accrued interest for the period of the 3 months, so that I will get the full payment for the 6 months at December. But because I had paid the 3 months to Grace, I will only now enjoy the 3 months, which has nothing to do with central bank, because central bank is paying me the full 6 months. I don't know whether I have answered it clearly.
I think you have. And there's something I had seen an interesting question. Where is that?
Grace asked you for that. Let me ask Bob. As you can see, we have so many people attending this particular webinar. There's a lot of enthusiasm. Do you organize webinars? Do you organize trainings so that people can come and learn? So besides, as somebody asked, besides having the money, what other things do you need to do? Do you organize trainings?
I have not organized. What I've done in the past, I have spoken a lot or taught a lot on radio and TV, but I think it's something that I think I have seen there's quite a bit of interest on demystifying the stock market.
We can partner.
Yes, we could. We can agree on what to do. We can discuss it and see how we can do this. And we go through the various products in the market, and probably every time we pick one, discuss about it, and then pick to the next one. So we can do that. Let's discuss this offline and see how we can do it.
Certainly. We'll be happy to.
Yeah.
Now, this is an interesting question I saw. Kindly explain about the term clean and dirty price.
Very good one. Now, the clean is when you sell the bond for the amount that you paid for. The dirty price is when you pay with the accrued interest. That's the difference.
Okay. Come again? Sorry, I was reading a question.
I was saying the clean price is when you buy the bond and just get the principal amount that you paid. Let's say if you bought a bond for 100, you get your 100 and you're selling to me. But if now the dirty price is the one that considers the period for which you had earned, you had the interest that you will miss, and I pay you that interest on top of the bond, then it becomes dirty price.
Okay. Somebody is saying in 1985-86, there was no government in Uganda. The government collapsed. What happened to the investors' money?
I may not be able to answer that in the sense that I do not know whether that period they were buying bonds, because even many countries started later to transact in bonds. So they didn't start originally when the country just got independence. This is something that started later. So we would have to, maybe if they can help us to find out from the stock exchange, it's called Uganda Securities Exchange, to find out from them whether the Ugandan central bank was selling treasury periods during the time there was that problem.
But Ugandans, please come and invest in Kenya. We are happy to have you.
Yeah.
All right. I think Richard has left. We will share the recording on WhatsApp. We may not be able to send to all emails. Please, the same way you received this link is the same way you'll get the recording. Allow us to do that to make it easy for us as well, so that we are able to also get to reach out to more people. All right. I think at this point, it's now 8:12, or rather 9:12. I think we may never really finish everything here. My question
but you
is,
can tell them, Grace. Tell them,
okay.
Grace, if they have questions, also they can direct them on that info, and I will help out.
Right. So please direct your questions to info@fibbank.co.ke.
No, not bank, just fib.co.ke.
FIB, sorry.
Yeah, .co.ke.
Yes, info@fib.co.ke.
Yeah.
And I think you will be sorted.
Yeah.
So, Richard, I don't know that you have any other question, or Bob can do his parting shot.
Parting shot, as Bob, who has done an amazing job in increasing our appetite for financial investments. Jacinta can share the link to Tara Solutions so that people can join, so that they can continue asking questions, so that we become financially wise and literate. Thank you so much for listening, and thank you.
Yes, Aisha Jua, info@fib.co.ke. Yes, that is correct. But there's something here. Can one increase the bond amount at any point in time, like money markets?
No. You cannot increase what was bought earlier, but you can buy a new one. You can buy the current one. So the money market, you can keep adding, yes, but for the bond, you cannot increase.
Okay. Victoria, you wanted to say something? Victoria, hello? Victoria, your hand is up? Or was it up by mistake? Okay. John Chege, your hand is up. John Chege, your hand is up.
Sorry, that was the initial time when we lost you.
Oh, okay. All right. Thank you for that. Felix Otieno? Felix Otieno, your hand is up. Okay, I think even for them, it was by mistake. All right. So
sorry, it's by mistake.
Okay, that's fine, Felix. Bob, your parting shot.
Just to say that I was very happy to be invited and to give the knowledge that I have. And I'm happy when our people, our investors make money or improve in their financial well-being. And maybe let me just say that the financial wellness is a fundamental need and desire for many of our people. And we as Faida Investment Bank, we also have MoneyWise, which is one of our directors runs with it and gives talks and speaks a lot about investment in money and financial advisory. They can reach that from us. And also we have Anchor Network Relationship, which also deals with financial wellness. So feel free in any of those products that you need help on. We are here for you and we can help to the best we know how. So thank you very much and all the very best to all Kenyan investors. All is not lost, even if there are some issues you feel are not going right.
All right. We have Alan Gumisiriza. I think he's from Rwanda. And he was asking about lessons we can learn from Greece and Ghana. I think we are going to have season 2 of this one.
Okay.
I think we are going to pick something probably for the beginning of the year where we can also dig deeper on just another one, so that
Okay.
then we keep learning. So
We can plan, yeah.
Yeah. But Bob, you have done such an amazing job. It's been a minute since somebody really demystified issues that easily. And I'm sure the people here will be very, very happy. We will share the recording. I hope you have seen the Atara Solutions WhatsApp group. Please join. We are going to share the recording on WhatsApp mostly, but if you wish, you can subscribe to our YouTube channel, Get It Right with Atara Solutions. That's where the recording will be uploaded and you can get to listen in, take notes, and then contact info@fib.co.ke for all your questions so that then you can get to understand. Somebody is saying off-head. Wow. And I think the fact that you're doing this without a presentation, I think we are mostly impressed, Richard? You see where goals are going. We are no more death by PowerPoint. Yeah.
Indeed,
Sometimes,
indeed.
Grace, they say
Yeah.
that people tend to read the PowerPoint instead of listening to the person. So
Actually, that's what happens.
Sometimes.
Yeah.
So they want to see whether you're following the PowerPoint. So sometimes if you can help, it's not that they're not good, but I'm saying if you can help and speak out, it helps.
Yes, it does. And especially here that we are also short of time. And that's the thing. PowerPoint is supposed to be in point form. Jacinta, somebody is asking for the WhatsApp group link. Maybe you can reshare it again. Please join us on the 15th of November for that dinner. Come. Let's engage, let's network, let's learn. Let's see how to grow our careers and our businesses. And let's see what we can do for 2025, because all is not lost, like Bob has said. And you can invest, you can grow your finances, and you can also get to learn and become rich. My friend was like, Grace, are you still chasing richness? We are chasing wealth. So yes, you can become wealthy. So we can get there in as we grow. So thank you very much, our audience. Asanteni sana. If you're in Naivasha for the IHRM conference, please say hi to me. I will be happy to say hi to you, especially if you're a Get It Right fan. It would be nice to see you. I'm here with Catherine Sidandi as well. So if you see her as well doing her thing, you can also say hi and appreciate the good work that she's doing. And if you have an event, please make sure you include sign language interpreters. And Catherine is available for your consultation. Thank you, Bob. And I am really, really, really grateful. And it's good to have you. And we look forward to another session with you. I think it's time we demystified some of these things. And I think, and especially about people rent to invest in stocks. A while back, there's a time it was like quail farming. So then then after a few companies, they are not doing so well, people are like, was it worth it? So maybe it's something that we really need to understand. At what point do you invest in stocks, and at what point do you really invest in whatever? So maybe that's a conversation we can have early on in the year. But thank you very much for making the time in this evening, and we're really, really grateful. Richard, as always, it's amazing to have you. Thank you for supporting Get It Right with Atara Solutions. And to you, our audience, we cannot do this without you. Thank you, thank you. See you next Tuesday, same time, same place, as we demystify another issue that is affecting both employers and employees. Please follow us on Instagram, Atara Solutions, like our Facebook page, Atara Solutions, subscribe to our YouTube channel, Get It Right with Atara Solutions, and connect with us on LinkedIn, Atara Solutions, or myself, CHRP Grace Nzula, or Richard J. Magoma is also on LinkedIn. And please, for all your investment questions, write to info@fib.co.ke. Thank you very much, guys. See you next Tuesday. Kwaherini sana. Have yourselves.
Thank you so much.
Bye-bye.
Good night.